Okay, good morning. Today we are going to start Chapter 3, and we'll get there. We'll talk about in just a minute what we're going to do. So in Chapter 3, what's due? Chapter 3 homework is due this weekend. Again, it is one of those homeworks that will take a little more time than ones later in the course. This is one of the big 3 chapters. This chapter is huge, and this chapter is probably the chapter that is going to sound most like a foreign language when we talk about it. So Chapter 3 homework is due this Saturday. There's also something in my accounting lab that would have become available yesterday. It's called a Practice Exam 1 quiz. That is not due until before you take the exam. So that one, we'll talk in a few minutes about that. I'll talk about what we're doing. Exam 1 is next week. It's Monday through Wednesday. You have to start it before 4 p.m. on Wednesday. That's the absolute last time you can start it. There is exam information on Blackboard. We are also going to talk about the exam the last 15 minutes of class today. I would ask that you hold all questions about the exam until I've talked about it, because I'll probably answer a lot of your questions. That also goes online, because we will absolutely flood the chat window with exam questions if we start now and completely miss what I'm talking about in class. So we'll cover the exam the last 15 minutes of class today. There's also a lot of exam information on Blackboard. So exam information, last 15 minutes of class. Okay, so we have a question in Learning Catalytics right now, and this again is going back to the last 2 weeks of material that we've covered. All the accounts that would be listed on the balance sheet. When you see balance sheet, in your head you should think accounting equation. The accounting equation is assets equal liabilities plus equity. And when we look at this one, all the accounts that we list on the balance sheet are the accounting equation. So we're going to pick assets, we're going to pick liabilities, we're going to pick stockholders' equity. And this is one of those questions that you need to make sure after you select all 3 items that you press submit so your answer is received. Make sure you get that message that your answer's been hidden so you can make sure it went in. So that question's going to remain open for a few minutes. It's going to close within a few minutes, but we'll get back to it. So again, we're going to come back the last 15 minutes of class, talk about the exam, but in the meantime, we're going to start Chapter 3. Chapter 3 is about accrual accounting, and we'll talk about what that is. We have 2 bases for accounting, and this is overarching over everything you do. There's accrual accounting and there's cash basis accounting. Well, that's an interesting, I animated this really weird. So let's go with the beginning. Wow, look at, see what I did here? That's interesting chunk. I think I'm just going to put it all up there and we'll talk about it. Okay, so there are 2 bases of accounting. The basis that everyone uses is accrual accounting. Everyone except the very smallest, tiniest companies use accrual accounting. With accrual accounting, we record the impact of transactions when they occur, which sounds like, well, why wouldn't you do that? So we'll talk in a moment where these differ. Accrual accounting is required by generally accepted accounting principles by GAAP. And accrual accounting, we record revenue when we earn it and expenses when incurred. And all of that makes absolute sense. And you're saying, well, doesn't everybody use accrual accounting? Well, there's another kind of accounting called cash basis. In cash basis, we only make an entry when cash is involved. So we only record transactions if they affect cash. An example of an entry we would not make under cash basis accounting is if we perform services on account. If we were a doctor's office and we perform services on account, said bill you. So let's say we had $2,000 of revenue in one day, and the patients or their insurance companies are going to pay within the next 30 days, we would not record revenue that day. That day would have zero revenue, and under cash basis accounting, we would record it when we get the cash. Another example of an entry we would not record under cash basis is we go to OfficeMax, get $6,000 worth of office supplies, and we say we'll pay you later. So we would bring the office supplies back, put them away, have $6,000 worth of supplies, and not record that entry because there was no cash involved. So cash basis accounting ignores liabilities and assets that may exist. It results financial statements are incomplete, and it can only be used by the smallest businesses. You as a taxpayer, I'm 99.9% sure you are on a cash basis accounting, and that's fine for individual tax returns. So we're all on a cash basis. So when we have our W-2 for the year, it's actually the income that we received in that year, not the paycheck we received in the first week of the following year or anything like that. So cash basis accounting is only for individuals, like on their taxes, and very, very small businesses. Everyone else is using accrual basis accounting. Let's see. Okay, so we're going to do a question real quick. Okay, what's due this Saturday? Okay. What's due this Saturday? Chapter 3 homework, Exam 1, Practice Exam 1 quiz. We started out the day. I started out telling you that this Saturday we have a Chapter 3 homework due. The exam's not till next week. The practice exam quiz is available now, but it is not due until next week. So the only thing you have due this Saturday is the Chapter 3 homework. Going to close in 5 seconds. I just told you the answer. Again, Chapter 3 homework. Okay, so what we're going to do now is we're going to talk about the difference between cash basis accounting and accrual basis accounting. And you'll see why I teach accounting and don't teach drawing, but you'll get the point. So what we have here is in May, a customer pays for 3 months of lawn care for $600. So we have a person operating a lawn mowing business, and we have another person contracting to have their lawn mowed. So this is in May. The customer pays $600 to get their lawn mowed in June, July, and August. Okay? So no lawn mowing is going on in May at all. Just the lawn service said, thank you for your $600, and they will mow the lawn June, July, and August. So then also the other facts of the example are in June we pay $50 for mower rental, in July we pay $50 for mower rental, and $50 in August. So those are the facts. That's when cash changes hands. We have $600 in May coming in, and then we have $50 we're paying out in June, July, and August. The actual mowing, the work, is being done in June, July, and August. Okay, so that's the facts that we're assuming. So what's going to happen under cash basis accounting? So we're going to start with cash basis accounting. In May, we'll have $600 worth of revenue because we got the cash in. So again, we're doing cash basis accounting. So we're going to record revenue in May. Then in June, we'll have $50 expense. July we'll have a $50 expense, and August we'll have a $50 expense. So under cash basis accounting, we will have May net income of $600, June a loss of $50, July a loss of $50, and August a loss of $50. So if an investor, so I've made this insanely simple, but if an investor were looking at this set of facts, the investor would say, oh, You shouldn't do what you were doing in June, July, and August. Those were really bad months because you lost money. Keep doing what you're doing in May. Well, what's going to happen if we keep doing what we're doing in May and never do what we do in June, July, and August, right? We're going to get sued because we don't have a legal right to that money until we earn it. So we can't just keep selling our services and never do any work. And this gives the wrong impression of what's going on in the company. It does not reflect economic reality. All it does is reflects the cash. So under accrual accounting, same set of facts. So the cash is still changing hands in May. We're still paying for the mower rental in June, July, and August. But what happens now is that $600 of revenue, the $600 cash that we got back in May, we don't record it as revenue in May. We record it as revenue in June, July, and August. So we split it out. So we're pushing $200 to each of the months that we're actually mowing the lawns. So then what happens is each of those months we have $200 revenue, $50 of expense, so we have net income of $150 each month. So we have $150 in June, $150 in July, and $150 in August. So our total net income in May is zero, which is fine. We didn't do any work in May, but we have net income of $150 in June, $150 in July, and $150 in August. Okay? So the cash basis accounting better reflects what's going on. We actually earned our revenue in June, July, and August when we did the lawn mowing. We did not earn the revenue in May. All we did was collect the cash in May. So everything we do in this class, we're going to be reflecting what actually happened when we earned the revenue, which is not necessarily when we got the cash. We can collect the cash up front. Like in this example, the customer paid us ahead of time, and then we earn it the next 3 months. Or we can earn the cash later, like if you go to the doctor and they say the doctor's office will bill you and you pay or your insurance company pays 30 days later. The doctor's office earns the revenue the day the services are performed, not necessarily when they get the cash. Okay, so what we see, cash basis is on the left here. We would have had income in May and lost money in June, July, and August. That's a signal to investors that we're not performing well in June, July, and August. Actually, we're doing great in June, July, and August, and that's what I have in the second column. We didn't actually do anything to earn money in May. That money is not legally ours until we perform the services. So accrual basis that's a very highly simplified example, but accrual basis is going to give us a better picture of economic reality. Okay. So what we're going to do now is we're going to do 1 or 2 homework problems, and this first one says, gives us a bunch of numbers, and question A is how much was its net income for 2014, and B was how much was its cash balance at the end of 2014. So we have to, first of all, get net income, secondly, get cash. So the first question is asking us accrual net income, because whenever you see net income, it's accrual. We will use accrual accounting in this class consistently unless in this chapter they ask you something about cash basis accounting. Second question, asking the cash balance, that's a different question. So we're going to interpret what we're given, and that's what's key in here is reading through and interpreting the language to know whether this is something that impacts net income or just cash. So the first question, how much was Southeast net income for 2014? Now, net income, you see net income, automatically you should think revenues minus expenses. That's my formula. So now I need to go through the problem and identify revenues, and it says Southeast Corporation made sales of $825 million. Now sales is sales revenue. Again, we can refer to it as sales revenue. Those terms are kind of interchangeable. So it tells us we made sales of $825 during the year. Of this amount, Southeast collected cash for all but $27 million. So what they collected in cash has no impact on our net income. So on this particular question, it's asking for our net income, which is our revenues we earned minus our expenses. So next up, we keep reading. The company's cost of goods sold was $255 million. Cost of goods sold is a new account for us. Cost of goods sold is an expense account. It's the only expense account that does not have the word expense in it. It's cost of goods sold. Sometimes it's cost of services. Sometimes it's cost of goods. Sometimes it says cost of goods sold like this, but it seldom says expense. It is typically a company's largest expense. So cost of goods sold, it tells us, is $255 million. And I just put parentheses around it to remind myself to subtract it, because we're trying to get to net income here in Part A. So we'll have sales revenue minus cost of goods sold. And then we keep reading, and all other expenses for the year totaled $325 million. So we're going to put brackets around that as well, and then we'll come up with our net income of $245. Okay, so the net income part of this problem, you're just looking for what their sales were and what their expenses were. Now, here's where the subtlety comes into play. When we talk about the second question is how much was their cash balance at the end of the year. Cash and net income are not the same thing. Net income is going to be our sales revenues, no matter if we got the cash or not, minus the expenses that we incurred, whether we paid the cash or not. We're not worrying about the cash when we're answering the question about what net income is. For question B here, how much was Southeast's cash balance at the end of 2014? To answer that question, we have to say, well, what did they start 2014 with in terms of cash? Let's add what they collected, subtract what they paid out, and that'll give us the amount of cash they had at the end of the period. So it's no different than if you say, okay, how much cash did I start this month with? How much cash am I getting in? How much cash am I spending? So what will I have left at the end of the period? That's what we're asking here. Okay, so let's start sorting through what we're given. Beginning cash, that's given in the problem. It says beginning cash was $75 million. Again, notice that we're not using the 6 zeros. The problem tells us in words it's millions, so we're entering our answer as 75. So our beginning cash. Next up, we want to get our collected cash. So we kind of look usually for the word collected or something else that implies that. The second sentence says, of this amount, the $825 million, they collected cash for all but $27 million. So that means for the amount of cash we collected, we would take $875, subtract the 27, because it tells us that of the $825, we collected cash for everything except $27 million, so we can subtract, and we get collections of $798. Okay, next up in our equation, we're going to subtract our payments. Now, it tells us in the next sentence the company's cost of goods sold was $255 million and all of their expenses were $325. It doesn't tell us they paid that. So again, we're looking for very subtle changes in the language. The next sentence, it says, during 2014, Southeast paid $350 million. So paid, when you see the word paid, that means cash is going out. So we're going to pay inventory of $350 million, and then the very next part of that sentence says that we paid $255 million for everything else. Okay? So now we can figure out our ending cash. So when you're looking for what your cash is, you have to look for the words that signal you're paying for them. If you paid for something, that implies cash is changing hands. If you simply incurred something, that may or may not be cash. Okay, and that brings us to the end of that first homework problem. So it's not a bad homework problem, but you have to watch for those changes in language that signal it's cash. If it's cash, it deals with what's your cash balance. Everything else, when you earned it or you incurred it, goes into the net income calculation. And we're going to do some more practice ones like that. But before we go any further now, we're going to circle back, and again, it's so important that you be able to identify different types of accounts. We're going to do a couple questions here. The first one is going to be list an example of an asset account. So this is one in Learning Catalytics that think about an asset account and type it in. It used to be last semester if it was 2 words, you put it as 1. So just don't put a space in your answer if you do use 2 words. So list an example of an asset account. So think about an asset account. Yeah, okay. Go ahead. You have to be in the app. Yeah, you can't have Learning Catalytics showing right now. You're good. Just like that, yeah. I mean, you can't have Collaborate showing right now. What? Showing. You're still sharing. I'll tell you if you're not. What? Okay, so your answer should be, you should have an answer in. You need to put an example of an asset. I'm going to close the question in about 10 seconds. And remember, you type your word in, you have to submit. Okay, so we've got some examples here, and what I'm going to do is I'm going to kind of walk through all the examples that people gave us and talk about whether they're right or wrong. The first one, accounts receivable. So I'm starting at the left and working my way across. Accounts receivable on the left, that is correct. Accounts receivable is something that our customers owe us. The next one, prepaid expenses, absolutely great example of another current asset. Those are things that we paid for in advance and haven't used up yet. We could have prepaid rent, we could have prepaid insurance, things like that. So that is absolutely right. Accounts payable. Accounts payable represents debts we owe to others. And accounts payable is actually a liability. So accounts payable is not an asset. Okay, then we have accounts receivable. They're just all spelled slightly different. That's fine. Your spelling's fine. So accounts receivable, again, is an asset. We were not looking for a number, so 75,000 is not right. Equipment is an asset. Inventory is an asset. The word asset isn't right because asset isn't an account. It's a type of account. Land is an asset. Cash was the #1 answer we could see because it's the biggest, and that is absolutely right. Cash is an asset, very much at the top. Investments are assets. Receivables, yeah, typically you're going to see accounts receivable, but receivable would work. Accounts receivable, again. Equity. Equity is not an asset. The accounts are assets equal liabilities plus equity. Examples of equity accounts are common stock or retained earnings. So equity is not right. Oh, maybe that accounts matches receivables. Maybe it was entered as 2 words. So That's fine. Supplies is absolutely an asset. Notes receivable is an asset, and accounts receivable is an asset. So those are good job. So pretty much did okay with those. So then we're going to do one more of these. And again, here we're going to go for, give me an example of a liability. Very important, enter your answer with no spaces in it, all as one word. Again, enter your answer without any spaces in it, so it goes as one word. Learning Catalyst is just kind of fussy that way. It likes it as one word. Okay, it looks like the rate of entry has slowed way down. We're going to close this in about 5 seconds. Make sure you hit submit your answer. You can't just type a word. You need to submit it. Okay, so let's go through these account titles here. So again, starting at the left, long-term payable. Okay, I'll give you credit for that one, but that's not technically an account. It's long-term notes payable, long-term loan payable. You wouldn't ever see long-term payable, but it's in the ballpark, so it's good. Salaries payable, yes. Utility expense. Utility expense is not a liability. Utility expense is actually an expense account. It's one of the subgroups of equity accounts. But salaries, where am I here? Utility expense would end up on the income statement, not the balance sheet. So utility expense is not a liability. Borrowed money. When you borrow money, it creates a liability, but an actual account is not called borrowed money. So that one would technically not be a liability as well. Accounts payable is absolutely a liability. Note payable is a liability. Wages payable is a liability. Oh, we've got a lot of one here. Accrued liabilities is a liability. Accounts payable is a liability. I'm assuming the accounts goes with payable. Or notes go with payable. So those are accounts payable, notes payable, those are all liabilities. Land. Land is not a liability. Land is an asset, so that would be wrong. Expenses are not liabilities, so that would not be a liability. Unearned revenue. Unearned revenue is a liability. Remember, that's one of those misnomers. You feel like it's not a liability. Unearned revenue is when we collect cash from customers in advance, like our lawnmower guy. They've got cash in May for lawn mowing he's doing in June, July, and August. Gift cards are unearned revenue until customers use them. Concert ticket revenue is unearned revenue until the concert is put on. And then we have accounts payable. Loans payable, those are right. Then we have unearned receivables. There is no such count as unearned receivables, but I know where you came up with that. Unearned revenue, unearned receivables isn't an account, but I know where you got that. So unearned revenue is the account. So that's just another reason you should know your assets, liabilities, and equity. It is important throughout this entire semester. If you don't know basic assets or basic liabilities or equity, this whole class is going to be an upward battle. So these are things you do need to know. You need to memorize those. Okay, so now we're going to go to one more question here. Okay, let's give this one a shot. Okay, an expense incurred in 2014. So the expense incurred, that means we used this item. We incurred the expense. So an example could be electricity expense. We used the electricity in 2014, okay? But we're not going to pay for it until 2015 because there's a lag. You generally pay like a month later. So we used the electricity, for example. I'm using electricity as our example. We used it in 2014. We're physically not going to pay it until 2015. Using the accrual basis of accounting, when does that electricity expense show up on the income statement? Does it show up in 2014, 2015, neither, or both? I will tell you right now, in the class, 70% of you are wrong. Okay? Now, remember our rule. This is accrual basis accounting. Again, we don't care when we pay for it. When we're talking about when does that expense hit the income statement, it hits it when we actually use it or incur it. So expenses hit the income statement when we incur them, not when we pay them. We pay cash, that's a whole different ballgame. So expense incurred in 2014, we're going to, if we incurred it in 2014, that's when it's going to be on the income statement. So now we're up to 80% of you are correct. So if you've changed your answer, you probably changed it in the right direction. Again, the rule for when we recognize revenue when it's earned. We recognize expense when it's incurred. So this tells us the expenses incurred in 2014, that's when we're going to recognize it. That's when it's going to show up on the income statement. Okay? So I'm going to close this question in about 5 seconds. We're up to 94% correct, so that's good. Again, you put the expense on the income statement in the year in which it's incurred. And it tells us the expense was incurred in 2014. Okay, so again, 2014 income statement, so good for getting there. We'll have more of these. You really have to watch. Whenever you recognize revenue when you earn it, when you do the work for it, or when you deliver the goods, you record the expenses when you incur them. And cash, when you get cash, doesn't really have anything to do with that. So then we're moving on, again, applying revenue and expense principles. I would also tell you that the PowerPoints that I put on Blackboard have a lot more words on them than what I'm showing here. So those would be good study material as well. The revenue principle, the basic rule on revenue, the definition on those PowerPoints you'll download is much longer than this, but it boils down to revenues recognized when the business performs the services or delivers the goods to the customer. And what I want to emphasize is revenue, this whole box right here, okay? Revenue is recognized when the business performs the service or delivers the goods to the customers. So that's our rule. That's when we recognize revenue, not when the cash changes hands. We're going to record the cash, absolutely. We will record the cash, but that's a separate entry. We're going to record revenue when we perform the service or we deliver the goods to the customer. Okay, so we recognize revenue when the business performs the services. So let's do this question. This should be pretty straightforward. The revenue principle requires that a business record revenue when the business A, receives an order from the customer, B, prepares the invoices for the customer, C, delivers goods or services to the customer, or D, receives payment from a customer. For this question, I would refer you to that box we just were at. Okay? This question comes right out of that box that I said, know this box. This question is straight out of there. No tricks or anything here. Okay, the revenue principle requires that a business record revenue when the business does what? Let's go back here. So again, I'm going to close it in about 10 seconds, but we were just at this slide. The revenue is recognized when the business performs the services or delivers the goods to a customer, where I said this is important. That relates exactly to this. The revenue principle requires what? That a business records revenue when the business does what? Of course, deliver the goods or services to the customer. Okay, we're going to do one more question and then go on to the next topic. So again, remembering that, okay, revenue is recognized when the business performs the services or delivers the goods to the customer. That is your overwhelming rule here. When the business delivers the goods or performs the service, not until that point. It doesn't matter if the customer pays a month before this. So the customer could say, hey, I want you to cater this party for me in December. It's July now, so it's July. You're going to cater this party for me in December. That's great. They could pay you for it, but you are not going to recognize the revenue until you actually cater the party. So it's you recognize revenue when you deliver the goods or services, perform the services. Okay, so we have okay, so this one's a yes-no question. A customer pays Starbucks $250 on March 15th for coffee to be served at a party in April. Has Starbucks earned revenue for this item on March 15th? Okay, remember, look at that rule that we said the business earns revenue when it actually performs the service or delivers the goods. You do not earn revenue until you perform the service or deliver the goods. So a customer pays Starbucks $250 on March 15th, okay? Starbucks, by the way, the customer is not taking the coffee out the door. Starbucks is going to deliver the coffee to this party on in April. So has Starbucks earned revenue on March 15th? Closing in 5 seconds. Good, good. Right. The answer is absolutely no. You do not earn the revenue until you actually perform the goods, deliver the services. So now we're going to move on to something called adjusting entries. Okay. So we're moving on to learning objective 3, adjusting the account. Okay, so when we, like our lawnmower, going back to our lawnmower guy, here's what we're talking about. Lawnmower guy in May collects $600 cash from the customer for mowing that's going to be done in June, July, and August. So when lawnmower guy gets $600, an entry will be made that debits cash and credits unearned revenue. So that's the original entry. So the $600 comes in, lawnmower guy's business is going to debit cash, credit unearned revenue for the $600. So we're getting in an asset, we're getting cash, and we also have a liability called unearned revenue for $600. So that's in May. Okay, so that's fine. So in June, lawnmower guy actually mows and earns $200. Now, how do we reflect that? In June, our books still say cash of $600 and unearned revenue of $600. But after June mowing, we only have a liability for $400, right? So $600, 3 months, $200 per month. So in June, we have to figure out some way that we can show, hey, we earned part of this unearned revenue, so we're going to do what's known as an adjusting entry. We're going to say, okay, let's recognize some of that unearned revenue, so we'll do an adjusting journal that reduces the liability and increases revenue, and that's called an adjusting entry. Now what we're going to do, there's several different types of adjusting entries. And again, the slides that are on Blackboard have a lot more detail, but we'll go through some major things right now. Adjusting entries, the principles behind adjusting entries, they're made so that revenues and expenses are recognized in the right accounting period. They're generally made at the end of the accounting period. So we absolutely do adjusting entries at the end of the year. We might do them at the end of the quarter or end of the month. We need to make them before we do our financial statements. And every adjusting entry will include at least one income statement account and one balance sheet account. Okay, so adjusting entries, basic overview, we do it so that revenues and expenses are recognized in the right period. We do it at the end of the period, and we do it, every adjusting entry includes at least one income statement account and at least one balance sheet account. So like in our example with mowing, mower guy, when we do an adjusting entry, we're going to be reducing unearned revenues, which is a liability, and increasing revenue, which is an income statement account. What we're going to do with a lot of the time that's left today and a lot of the biggest chunk on Wednesday is we're going to go through some different types of adjusting entries. Okay, so there are 3 basic categories of adjusting entries. There's deferrals, there's depreciation, and there's accruals. First one, deferrals. So you need to know the 3 categories. The first one, deferrals, it's an adjustment for a payment or of an item or receipt of cash in advance. So cash is first with a deferral. Cash exchanges hands, and then the revenue or expense is earned or incurred. Deferrals, prepaid expenses, unearned revenues are examples of deferral adjusting entries. Okay, so a deferral, the cash changes hands first. the cash, and then we're going to have the earn the revenue or incur the expense later. Okay, so we're going to go through deferrals in a little bit, but first I'm going to talk about the definition of each of these. So we have deferrals first. The next category is depreciation. And depreciation deals with plant assets, which plant assets are the equipment, the building. These are things that are long-term in nature and affect more than one period. We use them in our business. So it's going to be the building we operate out of. It's going to be the cars we drive, the computer systems we have. Depreciation, what we're going to do is we're going to take the cost of those items and spread them over the item's life. So when we buy a new building this year that we're going to be in for 30 years, we don't say, oh, this building cost $1 million, I guess we have $1 million of expense this year. We're going to spread the cost of the building over the life of when we're using the building, in a nutshell is what we're doing here. So depreciation is one type of adjusting entry. Okay, and next up, we have accruals. Accrual is the opposite of a deferral. We incur the expense or earn the revenue before the cash changes hands. So an accrued expense, the company records the expense before paying cash. Utilities, we use our electricity before we actually pay the bill, so we incur the expense, we pay the cash later. For accrued revenue, we record the revenue before collecting the cash. If we're a doctor's office, you come in, you pay a copay, but there's a big chunk that gets billed to your insurance company. That is accrued revenue to the medical office. So we've gone over briefly deferrals, depreciation, and accruals. So what we're going to do now is we're going to look at examples of deferrals. Then we're going to go through briefly, depreciation. Depreciation has its own chapter later on down the road. So we're going to see just the high points of depreciation, and then we'll go into it more in a later chapter. And then accruals, we probably won't do accruals today. I'm just running out of time. So we're going to start with deferrals. So deferrals. So we're talking about one type of deferral. The type of deferral is prepaid expenses. This is where we pay the cash up front. So we buy these supplies ahead of time. We pay rent ahead of time. We pay insurance. All kinds of things could be prepaid expenses. A prepaid expense is an asset. It's something we purchase that will benefit us in future months. We'll use it up in future months. So prepaid expenses are an expense paid in advance. Prepaid expenses are assets because they benefit us in the future. So we make the cash payment before the expense is recorded. Examples of prepaids might be rent. We may pay our rent 6 months in advance or 12 months in advance. That's a prepaid rent account. It benefits us in the future in that we have the right to occupy that space in the future. Supplies. Supplies are just called supplies or office supplies. Here we buy 6 months worth of supplies for our business. If we're a restaurant, we may go buy, if we're a fast food restaurant, we may go buy $5,000 worth of paper cups. And those are supplies for us. We're not recording it as an expense the day we get it because we're going to be using those cups over the next 6 months. So supplies might be a prepaid. Insurance. Companies might oftentimes pay their insurance a year in advance. That's a prepaid expense. And then advertising, you can pay for your ad campaign a year in advance as well. So we have some examples of prepaid expenses. Prepaid expenses require deferral adjusting entries. So what we're going to do is we're going to do an example of an adjusting entry. We're going to actually walk through what happens when we record the initial prepaid account and then how we do the adjusting entry. So let's say that Freddy's Auto Service prepays 3 months store rent, $3,000 on June 1st. So what they do on June 1st, they write a check for $3,000 and that covers rent for June, July, and August. So when they make that payment, they're going to be debiting prepaid rent and crediting cash. Okay? So that's what they've done on June 1st. That is just recording a transaction. The 1,000 times 3 is just showing you a computation. It's not part of the account. Okay, so we have recorded the transaction is recorded. We have an asset called prepaid rent for $3,000, and we use cash to pay for it. So when we post those in the accounts, we see that June 1st prepaid rent has a $3,000 debit balance, and cash has a $3,000 credit to it. It doesn't. It probably has a balance more than that, but that's the effect of that transaction. That's what we've done if we post it to the accounts. Okay, so next up, now throughout June, prepaid rent carries a balance of $3,000. Now, at the end of June, we have used 1 month of rent. So we have used $1,000 of rent. So what we're going to do is we're going to recognize that we have $1,000 of rent we've used. This is the adjusting journal entry, the deferral, and we're going to credit prepaid rent for $1,000. So what happens with this entry is we started with $3,000 in prepaid rent. We credited $1,000 out of prepaid rent in that journal entry, and we recognize rent expense of $1,000. So at the end of June, we have an asset called prepaid rent for $2,000. How do I know it's $2,000? I started with $3,000. I used 1 month of rent, so I reduced it by $1,000, and I end up with a balance of $2,000. So now in July, we'll do the same adjusting entry. We will debit rent expense and credit prepaid rent for $1,000, and after July, our prepaid rent account will have a balance of $1,000, and after August, our prepaid rent account will have a zero balance. So with the deferrals, we're recognizing after the fact that we're incurring the expense. So we need to, so this is an example of a deferral adjusting entry. Okay, we're going to do one more. We're going to do supplies. So that was prepaid rent. We have to do an adjusting entry for it. Prepaid expense. Supplies are a special thing. So on June 2nd, Freddie's Auto Service paid cash of $700 for cleaning supplies. So when the transaction to record is cleaning supplies, we're going to debit supplies and credit cash because we're getting supplies, the asset going up, cash is going down by $700. So we have supplies, we will debit $700, we'll credit cash for $700. So now those are supplies we're going to use over the next few months or whatever. Now comes the end of June. This one's a little different. We can't just say supplies. We've got $700 worth of cleaning supplies. How much are we using each month? I don't know. Supplies are not a passage of time. Rent is a passage of time because we can say, well, we're going to use it over this amount of time. Supplies, instead what we do is at the end of June, we look and see how much supplies we have left. We know that we started with $700 of supplies. We do a count. We determine we have $400 left. So what that means is that we use $300 up. Again, we started with $700. If we count how much we have left, we have $400. What happened to it? We used it up. So we have $300 as the difference between the $700 we started with, the $400 that we ended up with. So we have $300. We're going to credit supplies expense. We're going to credit supplies for the $300. We're going to debit supplies expense, and that gives us a balance of $400 in supplies at the end of June. So those are two examples of deferral adjusting entries. What we're going to do on Wednesday is we're going to go through an example of depreciation entry. We'll go through some examples of accruals, and then we're going to go through the rest of the accounting cycle for this. But what we're going to do right now is we're going to talk about the exam. Okay. So I'm going to switch over here. Okay, again, if you're in the chat room, I know people generally have a lot of questions. We'll wait till we walk through it. If we don't have time to answer your question today, we'll certainly have time on Wednesday. But I want to walk through some basic information about the exam. I did email everyone a little bit about the exam, so this could be a repeat, but it doesn't hurt to repeat when it's a high-stakes thing like an exam. So our exam is Monday, February 15th through Wednesday, February 17th. The last minute to start the exam is 4 p.m. That is not, by the way, a recommendation to start it at 4 p.m. I can tell you horror stories of what happens at 4 p.m. The chapters on the exam are chapters 1 through 3. It's everything we've done. It's what we've talked about in class. It's what's on the PowerPoints. It's what's in those 3 chapters. It's what's in the homework. Okay, I need to make this note because some people do attend remotely. All times that I talk about are Eastern Standard Time. I will not be saying Eastern Standard Time every time I say this, but because we do have some people who are not physically in Ohio, I just want to make that clear. Everything's stated in Eastern Standard Time. Okay, now I've emailed you about where you're taking the exam. When I emailed you, you need to read that email. That is not a mistake. It's not meant for someone else. It is geared to your section. If that's not your understanding, we need to have a conversation because I did those emails based on what section you are enrolled in Flashline, okay? And when you're enrolled in that section, this is how you take your exam. So you need to pay attention. I will email you at least one more time to tell you your exam location just to make sure we're clear on that. So now I'm going to be talking specifically to sections 1 and 2, and then I'll talk to sections 5 and 6. When I email you, it is talking about your specific section. This is one of the few times that I talk about both sections in class just because I've got you both in front of me. Sections 1 and 2, you are in the face-to-face class. You take your exam in the computer lab on the 2nd floor of the College of Business. Their hours are 9 a.m. to 9 p.m. Now, there's a couple caveats. You cannot start your exam after 7 p.m. on any day. You cannot start your exam after 7 p.m. on a Monday, after 7 p.m. on a Tuesday. They will not let you start it. So you need to get in there before 7 p.m. On Wednesday, you can't start it after 4 p.m. Okay? Start by 7 p.m. to be allowed to take it, except Wednesdays start by 4 p.m. Lines may be long. Now, we haven't had lines in the last semester. Every now and then, we get caught totally unaware. There's no way we have to predict lines. The horror story was 2 years ago, before it was the week before spring break. The lab lines, whatever day this was, the lab lines, I think it was a Thursday, and my exam went, because I was a Tuesday, Thursday at that point. So the lines to take the exam were over 3 hours long because everyone waited for that the last minute. This is not a good feeling. If you email me and say, oh, I went to take it at 4 p.m., but there was an hour-long line, that's not an excuse. The 4 p.m. is your absolute drop-dead time, and you'd better schedule it in your own life. You don't schedule in the lab, but in your own calendar, schedule it way before 4 p.m. If it were me, I'm very risk-averse. I do not want to gamble on getting a 0. You will get a 0 if it's after 4 p.m. when it starts, for whatever reason. You get a flat tire on the way here. There's a 0. You cannot wait past that deadline. There are so many deadlines in life that they don't care if you pass the deadline or not. You simply won't get it. Same thing here. 4 o'clock is that cutoff. Have plans to take it on Tuesday and have Wednesday as your backup plan. Wednesday should not be your main plan. Anyways, but I can't tell you when to take it. I'm giving you a three-day span from 8 o'clock Monday morning until 4 o'clock on Wednesday. There's no appointments. You may wait in line. And In the lab, they will provide you a calculator. They will provide you the exam equation sheet. You can see the exam note sheet online. We'll get to that in just a moment. And scratch papers provided for you in the computer lab. So those items are, you have to take your driver's license or your flashline ID. You need official photo identification to take your exam, no matter where you take it. If you take it ProctorU or in the computer lab, you need official photo identification to take it. Okay, so that section, that's what's unique to sections 1 and 2. So your face-to-face section, when you sign into My Accounting Lab, or when you sign into Blackboard, you should see our course listed there. You should see the F2F, face-to-face, in the title of the course. It'll be My Accounting Lab sections 1 and 2. But again, pay attention to that email you get from me, because that email confirms to you what section you are officially registered for. I'm using official university records. Every semester, I will have someone show up. This first exam, in last semester, I had a total of 6 people show up in the wrong place for their exam. And when I asked, well, didn't you read my emails? Because I email way too much. I email a lot. And I always got back, I thought that was just an email going to the whole class. Well, if you're in sections 1 or 2, you are my whole class when I'm emailing. When you're in sections 5 and 6, you are my whole class when I'm emailing. That's why they're separate Blackboard sections. So pay attention to the emails you get from me. Sections 5 and 6, you take your exam on your own computer in a private location. They won't let you take it in the middle of some busy coffee shop or something. You need a private location. You need a webcam and high-speed internet. You can go to ProctorU's website. You should go to ProctorU's website like this week and test your equipment. Telling me you don't have a webcam doesn't qualify to take the exam in the computer lab. If you're in sections 5 and 6, you have to take your exam on ProctorU. End of story. So you need a webcam, private computer. Test your equipment. Do not wait to test your equipment. This is the worst case to me, is you wait till 4 o'clock on Wednesday, you haven't tested your equipment, you've got to take the exam because the due date's now, you get on to take it, and oh my gosh, the computer won't work, something doesn't work with your browser, you've got to make some adjustments. This is panic city time. This is not the way to set yourself up for a great exam experience. So test your equipment ahead of time. You have to start the exam no later than 4 p.m. That does not mean that scheduling your exam at 4 p.m. is a good idea at all on Wednesday, because those exams are getting cut off. Schedule your exam. This is important, and I've emailed you. If you're in section 5 or 6, you already got an email from me. Schedule your exam at least 72 hours in advance. They'll charge you $6 or something if you want to take it like right now. If you just want to like call up and say I want to take it right now, you're gonna have to pay $6. As long as you plan it at least 3 days in advance, you don't have to pay anything. And if by scheduling now, you get the best selection of times. Guess what? There are more times that are more popular than others. Probably Monday morning, you can probably take it. There's probably not going to be a backlog on those. But keep in mind that ProctorU schedules exams across the country, so you get a better time selection the earlier you register. Also, if you're in section 5 and 6, you can schedule your exams, the second exam and third exam right now too. There's nothing stopping you. Okay, ProctorU, you're allowed a non-programmable calculator. You're allowed to have blank scratch paper. You will have to show ProctorU on your webcam that you have a blank scratch paper, and ProctorU will provide an exam equation sheet for you to use. So they will provide you a PDF to use for the exam. Okay, and the note sheet that the lab provides you and the note sheet that ProctorU provides are identical, and that is on Blackboard right now. So you can look and see what the exam sheet looks like. So there is the end of my information that's specific to either section. Now, everything I say applies to everyone. Exam basics, you have a 120-minute time limit. The first exam, the average time, roughly 45 minutes. Allow yourself plenty of time. For whatever reason, in the computer lab or ProctorU, you might not get started on time. So don't schedule us in there by saying, oh, I have an hour to take it right here before I have to be at work. That's, again, a terrible strategy. You need to do it when you have a little bit of leeway so you can be more relaxed. There are 3 to 4 exercises on the exam, like homework exercises, and there's 22 to 28 multiple choice questions. By the way, this PowerPoint that I have right here is on the home page of Blackboard. If it's not right now, it'll be by 11 a.m. So if you don't have everything written down, it's fine. You have an exam equation sheet. You cannot bring your own notes to the exam. I've already done the work for you. Everyone has the same note sheet. The note sheet for the exam can be found on Blackboard. You can also access it directly at tiny.cc/exam1notes. Again, you click on Blackboard under Exam Info. You will see this sheet there. Do not rely on the ending time in My Accounting Lab as the time due. The ending time in My Accounting Lab, I have to do it that way for a long explanation, but the ending time in My Accounting Lab is not when the exam is due. You have to start it by 4 p.m., okay? That's the rule. I wouldn't schedule it at 4 p.m., but you have to start it by then. My Accounting Lab will not have the correct ending time. There's administrative details about why I have to do that, but Section 5 and 6, let's say you didn't schedule your exam ahead of time. You're not going to be able, if you wait till the last day and you go on to take it, you're not going to be able to schedule it online. You're going to have to call on the phone. Okay, there's no curve on the exam. I always get that asked. The exam's not curved. Typically, I'll have people score 100% on it, and then I'll have other people score not as much. Basic exam rules. No cell phone visible ever. No talking, texting. Don't leave the computer. Respond to the proctor if he or she has questions. No other windows open during the exam. No notes other than the exam info sheet. If you're in section 5 or 6, you have to ask the proctor if you're done. You submit your exam and then talk to the proctor and say, are we all set? Can I close the window now? And then when they say yes, go ahead. Sometimes I've had people, they're taking their exam, they close the proctor window, and if you do that, you've just earned yourself a 0. Okay? You cannot close the proctor window until you've submitted your exam. And I get notified of that. The exam in the computer lab is recorded, as is ProctorU. So I don't want any of these things to happen. Last year, actually, I made it through, did not have any incidents of rule violations. I hate when people cheat or try to cheat. It's terrible. It's terrible for you, but I hate it. Please don't do it. You're better off taking the exam, doing it yourself, than getting that mark on your record. Automatic 0 if you violate any exam rules. If you violate exam rules, I will report you to the university because that's what my contract says I need to do, and I'm not going to risk my job over your cheating. So, detailed exam information, see Blackboard for that, how to prepare for it. There is a practice exam, which I'll talk more about on, we've got 3 minutes, I can do this. Okay, practice exam. Do the practice exam until you know the content. You can take the practice exam up to 5 times. Let's talk about this. The practice exam counts as a quiz, okay? You have 5 attempts maximum on it. The score is the average of all your attempts. Each attempt counts. You're going to get the average of all those attempts and take it more than once. Work through the problems. Don't just guess. Just guessing answers is not, you're not going to learn the material. It'll be different each time you take it. There is no time limit on the practice exam. The practice exam has the help me solve this. Everything else on the practice exam. Those items are not on the real exam, but you can take your time, work through the practice exam, use the Help Me Solve This and all the other aids that are there, and take your time, and every attempt does count because it's the average of all your attempts that you take. It can be one of your drop quizzes at the end of the term. That's fine. Don't wait till the last day to take the exam. Let me see. Okay, practice exam became available yesterday. It is available through 4 p.m. on Wednesday the 17th. It counts as a quiz, maximum of 5 attempts. The practice exam is so similar to your real exam. Every time you take it, it's going to be different, but that's what your real exam is going to be like. If you take the practice exam a couple times, you don't use any notes, and you're getting in the 80s or 90s, you should see that kind of score on the exam. People don't generally do better on the exam than they do on the practice exam, though, so really work through the practice exam. That's what you're going to expect. Okay, let's see. Practice exam does count as a quiz, and take it more than once. The average score counts. And again, we're going to schedule your exam if you're in section 5 or 6 this week. If you have trouble scheduling, call ProctorU. This is sections 5 and 6, and test your computer equipment before your exam. No matter what exam section you're in, you need a photo ID. And I thought I had one more thing that I really need to emphasize. If during your exam, okay, this is the golden rule. During your exam, if there is any issue, email me immediately regardless of what the proctor says. So let's say there's some problem, proctor says, and it doesn't matter, ProctorU proctor or Computer Lab proctor. The proctor goes, oh, I'll report it to Dr. Teets. Is it that proctor's exam? No, it is not high stakes to that proctor. It's high stakes to you because it's your exam. So if there's any issue at all, email me immediately upon conclusion of the exam. Email me immediately upon conclusion of your exam because I need to know. If there's a problem, we need to resolve it right then, not when the proctor gets back to me. That test is more important to you than to the proctor, so it's your responsibility to email me. If I don't hear from you, you could potentially have a 0 due to the issue. So you need to email me immediately, and believe me, during the exam, I am monitoring my email constantly, and I will get back to you if there's some kind of crisis. I will absolutely get back to you. Okay, so we're going to end class now, and we are going to finish Chapter 3 on Wednesday, and then I'll take questions about the exam on Wednesday. So I'll see you then.